Today we're going to talk about the new plugin from Metastock called FOREX Trader's Advantage. And this plugin has received a lot of notoriety, as we've had a lot of different people beta testing the plugin that have had some very successful results, as well as a lot of people very excited about the plugin now that it's been released. Before we start talking about the plugin, we're going to read this disclaimer. Hypothetical performance results have many inherent limitations, some of which are described below. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between historic performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or to adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot be fully accounted for in the preparation of hypothetical performance results, and all of which can adversely affect actual trading results. This simply means that if we show you a result or past performance from trading, it doesn't mean you actually would have traded in that manner. When real money is at stake, you may not trade in the same fashion as a hypothetical result. Now, before we get into the FOREX Trader's Advantage, I do want to explain that you do need the Metastock Pro FX software or the Metastock Pro software in order to run FOREX Trader's Advantage. And you need a data feed. Metastock Pro FX is powered by Quote Center, which is our own data feed delivered to us from Reuters, our parent company. Or Metastock Pro, which also can be powered by Quote Center, or it could also be powered by eSignal. Now, we had a lot of different people beta test this software, and as I'm giving this presentation today, the software has only been released a couple of weeks. And so we're using the testimonials given to us by some of the beta testers. But Kevin from San Diego writes into me, and he says, I'm writing you this letter to let you know how excited I am to have been a beta tester for the FX Trader's Advantage plugin. As a longtime user of Metastock Experts, I have to let you know that the robustness and profit potential of this specific advisor and explorer is really quite remarkable. Not only will the FX Trader's Advantage get you in on the right side of the trend, it is also adept at indicating market turns and changes of direction. The profit potential in a volatile market is enormous. Riding the trend in a slower trending market is equally satisfying. Thank you for bringing this product forward. It is innovative in concept and highly profitable in application. And it is easy to use. What could be better? We'll share several more of these testimonials throughout the presentation today. Now here we're looking at a FOREX Trader's Advantage Simplified Layout. And I will be talking about two methods today. We're going to start out talking about method one, and this is what you're looking at here. The only difference between the simplified layout and the full layout I'm about ready to show you is that the simplified layout has two lines, a green line and a red line, with no dots. When I show you the full layout, you'll be able to see some dots on there as well. See all sorts of symbols on the screen. We'll go over those symbols in just a moment. Down here you see a volatility window. Now, because there's no reported volume in the Forex market, we're going to be looking at volatility. We're going to now go to the full layout, and notice the upper window has dots on it now. You also see the trend of the particular chart we're looking at is far different from the trend we were looking at on the previous chart. But other than that, the windows look very similar. We also have what we call the All Targets layout. Later on, we'll be discussing the All Targets layout. And you may have noticed that in the previous charts that I was showing you that all of these charts are based off of 5-minute data, as you see this one is as well. The All Targets layout will actually give you a 10-minute chart, 15, 30, 45, and 60 coming down this right side. And we'll talk about more how you would trade in these other time frames using the All Targets layout a bit later in the presentation. This is a quick guide to let you know what some of these symbols mean. It's pretty simple. When the green line crosses above the red line, you have a blue thumbs up. When the red line crosses over the green line, you have an orange thumbs down. Bullish cross, bearish cross. A blue B and a magenta B indicate bounces. A bounce is when the lines don't actually cross, they come together and then they diverge again. If they diverge with the green line on top, that's where you're going to get the blue B. With the red line on top, you're going to get the magenta B. The key to this whole plug-in is the red and the green bar. The red and the green bar signify alignment. What does that mean? It means we're looking at, even though you're only looking at a 5-minute chart, the program is looking at 21 different time periods at the same time. And we'll look at those and what those time frames are in a minute. But if you get 3 of the 20 with the green line crossing above the red line in a fresh cross or a very recent cross, so 0 bars ago, and it happens all at the same time, you get the green bar. If you get 3 time periods crossing to the red side, you get the red bar. Once you've received a bar, you then want to look for a buy-sell signal in the time frame designated. 5 minutes, 10 minutes, or what have you. The blue and the magenta bars signify 3 bounces occurring at the same time. This is very rare. We also have stop losses. This is not really orange. In fact, the program even refers to this as the golden bar and the turquoise bar. These bars indicate potential times to exit the market or place stop losses. We're going to actually walk through a trade, and here along the right side you see our expert commentary, and you see that we have the 21 different time periods. Now you're not able to see the monthly and the weekly because I scrolled down on this particular window. But you can clearly see that we have a green bar that is formed, and these happen to be candlestick bars, but no other significance on the green bar other than it's painted green. Now, the only reason why this bar is painted green is because the 420-minute time frame, the 360-minute time frame, and the 15-minute time frame all had green crosses at the same time. And you can see this illustrated by looking at the 420 had a buy 0 bars ago, the 360 had a buy 0 bars ago, and the 15 had a buy 0 bars ago. Therefore, we have 3 time periods crossing at the same time, and now we need to watch for the same signal in the target time window of 5 minutes. Well, we happen to be on the 5-minute chart. In order to get that trigger, the green line has to cross above the red line, and then we will actually see a buy signal. On the following bar, the lines came very close to crossing, but never actually crossed. The next bar, we did get a cross, and therefore we get our green arrow, or our 5-minute buy. And so we just simply, if we're following the system, place the trade. Now many of the beta testers that were so successful with this product were placing trades on the first green buy and the first red sell. Okay, now you'll see that you can get multiple buy signals as we go along here. We move along on the chart, you see the lines are about ready to cross. Well, the idea again behind this plugin is not just buy and sell every time this line crosses, but rather to base your buying and selling off of alignment prior to the cross. We have alignment again, but this time it's to the bullish side again. So, when we get that buy signal, we have the choice of either adding on to our trade or just simply sticking with the original trade that we placed here. You can see that we've had some crosses to the downside in there. We've chosen to ignore them because, again, we're looking for alignment to proceed any sort of cross in the 5-minute time period. You see we have another buy signal. So again, depending on your portfolio and your ability to add on, you could possibly be in 3 trades at this time. You see we have some crosses to each side, which we're going to choose to ignore. And now we have what we call the golden bar. The golden bar signifies a potential stop on a bullish trade. The turquoise signifies a potential stop on a bearish trade. Well, obviously we are in a current bullish trade. And so at this point, we could either elect to ignore the stop, we could elect to sell immediately, or we could elect to place a stop somewhere below the golden bar. So we can see if we would have taken the trade after the golden bar, we also would have received a orange or red thumbs down, meaning that we had the red line crossing above the green line. And we would have been up 7 pips on our initial trade. Alright, if this is the only trade we would have been in. Now obviously that's not a huge gain, but it's not a loss either. You can see that the golden bar was accurate, and that the market did start to fall a bit. Now if the stop would have been placed 5 pips or 10 pips below, we may or may not have been exited out of this trade. We then get another green alignment. Assuming we exited out of the trade, we would get in on the next green arrow. If we're still in this trade, this initial trade, we may or may not be getting in here. You can see now we have a turquoise bar that's appeared. A turquoise bar is a potential stop, but only if you're in a bearish trade, because that is indicating that the market is probably going to go up. Well, if the market's probably going to go up, and we also got another buy signal, we probably want to stay in either our initial trade back here, or this trade here, or maybe we're in all these trades. We could also add on to our position here. And the turquoise bar was also correct. You can see the market continuing to rise. Market always retraces. You can see here that we did have a red thumbs down, but we're not acting on that. We still haven't seen any red bars on here, meaning red alignments. See, we have 3 green alignments in a row again, and another buy signal. Another buy signal, and another buy signal. We've had 8 buy signals in a row, which is not uncommon for the plug-in. Again, depending on your account size and your trading strategy, you may be adding on to these trades or just sticking with your initial trades. We finally receive bearish alignment. You can see the time frames, and they're all short time frames, 30, 15, and 10, all aligned at the same time, telling us to look for a sell signal in the 5-minute time frame. We then see the red arrow, the red sell arrow, and at this time we exit our trades. The other thing we can do at this time is obviously enter a short trade or a sell trade. Now if we would have just stuck with the initial trade that we placed way back here, this was done at near 3 a.m. in the morning. The exit was placed about 9 a.m. in the morning, and this was mountain time. You can see a 35 pip gain from that time period. But imagine if you would have added on to all these trades the pip gain that you would have had in that time increment. This is Forex Trader's Advantage, Method 1. Now, Bobby in Kansas City tells us that FXTA is the most user-friendly Forex trading tool that I've ever used, and with the most consistent positive results. I'm as average of an individual as there is, and with FXTA I can trade the Forex market with the knowledge and confidence to be successful. This truly is the next generation of trading software. You can see here that we have our all targets layout now, and this is the layout that we would use if we want to potentially place a trade in a time frame other than 5 minutes. So you can see we have all of our alignment going on right here. 5 bars in a row have aligned. If we read our commentary, we can see which bar is aligned, but we can also see that it's asking us to look for a buy signal in a 10-minute window. Unfortunately, we don't have a 5-minute chart on the screen. So we have to bring up our all targets layout, which gives us a 10-minute, 15, 30, 45, and 60-minute time window. We're now looking up here at this 10-minute time window, and we're looking for a cross in that window. And you can see the lines, so you could potentially see where they cross. But we've also come up with these green and red lines to let us know exactly where they crossed, and then the bar down here, if it's green, we're in a buy, red in a sell, and so forth. I want you to watch this window very closely as we go to the next screen. And you can see that we got our buy signal. At the same moment we got our buy signal in the 10-minute, we also got our buy signal in the 5-minute. The reason why is I'm sure that one of these bars here also was suggesting a 5-minute trigger. We also got a turquoise bar. All of these positive signals. Raj in Maryland writes in and says, while paper trading these signals blindly, I was amazed at how many pips one can generate from this simple indicator. Additionally, it allows me to pyramid my positions at my discretion by giving me multiple entry signals in the chosen indicated direction. I've also looked at confirming the signals with my own technical analysis and have arrived at the conclusion that the plugin provides as good, if not better, entries as my own analysis would provide. The only difference would be that I can take more trades with confidence using the plugin than if I were analyzing the trade myself. Further, since this is a mechanical signal generating system, the emotional part of the analysis has been filtered out for me, thereby placing more emphasis on the trade rather than the uncertainty of entry-exit criteria. Thank you for bringing this product forward. It is innovative and highly profitable, and it's easy to use. Raj is basically saying, look, I'm a technical trader, and I can analyze the trades and come up with successful trades on my own. But why would I do that if this product's generating as good, if not better, signals, and it's eliminating the emotional aspect of trading, also allowing him to place more trades? Now this layout is our method 2 layout. Now, I will probably confuse most of you here, but that's okay because I need to explain this to you. Method 1 was the initial method that we designed. This is the method that the beta testers were very excited about and successful with. But method 1 does have a situation where sometimes the green buy arrows, the red sell arrows disappear, or maybe even appear after the fact. I like to call them expiring signals. Now, if you receive a green buy signal and 10 bars later it's now gone, should you panic? Well, the answer is no. You should basically follow your same trading rules, looking for golden bars or red alignment. A green signal, when it occurred, was valid. And so you're just basically following the trade from that point. We decided to invent method 2 because we tried to do a back test on method 1. And of course, you can't back test method 1 accurately. We could produce a back test, but the problem is that even though we produced a back test, it was not an actual representation of how you would have traded. And so we decided to come up with method 2, which is a totally different algorithm. Looks the same, but it's different, and it performs differently. But method 2 can be backtested. We found that method 2 does not work as well on 5-minute data, or 5-minute time periods, as method 1, but tends to have a decent return in the longer time frame. You can also see that there's several different time frames on the chart, 30-minute, 60-minute buys and sells. And the theory behind this is you don't get another 5-minute buy until you get a 5-minute sell. And so, remember with method 1 where we received 7, 8 5-minute buys all on the same chart, here you're not going to get that, but you're going to get several different time periods all on the same chart. So let's walk through a method 2 trade. This is going to be a 30-minute trade, as you see here. You have a 30-minute sell. We're going to ignore the other time periods. And in fact, if all you were trading was the 30-minute time frame, you could actually cut those other time frames off. The idea is essentially the same. We've got a 30-minute sell. Now, since our 30-minute sell occurred, we've got about 8 or 9 bars, and you can see we've had a 10-minute sell, a 15-minute buy, a golden bar, and a 15-minute sell. We're going to ignore all of these because we're only focusing on the 30-minute. Now, what do we do with a golden bar? Well, the market is going down. We're in a short trade. A golden bar indicates that it's going to go down further. We actually like that. We're going to stay in the trade. You can see we've got another golden bar that's occurred, and this is a big golden bar. And if we're in a short trade, we're pretty excited about this golden bar because we're making a lot of money at that point. You can see that the market flattens out for a time, and there's a lot of very, very quick crosses. And we're still looking at a 5-minute chart, even though we've bought in the 30-minute time period. And what we're waiting for is either a turquoise bar or a 30-minute buy period. Or buy signal, excuse me. You can see the market continues to go down after that flattening out period. And then it starts to reverse until we finally get our 30-minute buy. Now to look at this from the first 30-minute sell to the 30-minute buy is a 48 pip gain. It's a very nice trade. So it works very similar to method 1, but remember, the algorithm is totally different. Most of the people using this product are actually using method 1. I also wanted to show you, and again, I have method 2 on the screen, but don't worry about what method it is. What we're going to be looking at is our pivot indicator. This happens to be a 60-minute pivot indicator, looking at the median price for the last 60 minutes, and then it moves to the next 60-minute period. You can see the center line is the median price for the 60-minute period, the previous 60-minute period. And then we have standard deviations or support and resistance lines on either side of there. We go 2 deviations out on the support side, 2 deviations on the resistance side. See, our most recent bar is a bullish alignment. And that bullish alignment generates a 5-minute buy. You can see we just recently had a 5-minute sell. And we're right in the middle of our trading range. You can see if we would have placed a 5-minute buy here, we quickly jumped up until we hit the resistance line. Now, most people don't exit a trade when it hits the resistance line. They wait till it breaks above the line, and they look to see if it comes back down. However, you could have exited here, and of course you would have made some profit. This is where we left off. We've got about 10 more bars here. You can see that we just hung out right on the resistance line, the upper resistance line. We did break above. We started to move down below, but as it was moving down below, we then changed time periods. You can see that the median price moved way up to right here for that 60-minute period. At the same time, we were breaking down below the line, so it is possible we could have sold at that point. We're going to ignore this sell signal because it's a 15-minute sell signal. We're trading in the 5-minute time window. You can see that we started to retrace a bit, and now we're back down to the medium price range. We're still up on our overall trade. This is where we'd left off, and you can see it started to move up, retraced a little bit, and then we had the turquoise bar. We like the turquoise bar, right, because it's indicating that the market's probably going to bounce up a little bit. And so, we're still in the trade. We hit the upper resistance band again, but this time, not only did we break above the band, but we also got a golden bar. And of course, the golden bar indicates a possible downturn in the market. And as soon as we broke back down below the resistance line, if we would have sold out of that trade or exited out of that trade, it would have been a 24 big pip gain. And when you're using the golden bars or the turquoise bars to exit a trade, you don't necessarily get into a short position at that time. When you exit out of a long position, you possibly exit out of the market altogether. That's how the pivot indicator works. The pivot indicator comes with the software, the Forex Trader's Advantage. Remember, Forex Trader's Advantage is a plug-in to Metastock. So these screens are all Metastock screens that we're looking at here. But the Forex Trader's Advantage is what's putting these buy and sell signals on and the alignments and all of this sort of thing. And you can see that the market did continue down. The golden bar and the resistance were correct, and the market continued down at that point. Now, I mentioned with method 2, we can also backtest. I'm going to show you a backtest in Metastock. This is the way the backtester looks. And here we've highlighted all the different time frames ranging from 5 to 60 minutes. We've then chosen our various currencies that we want to test, and we've chosen them in the 5-minute periodicity or time frame. Make sure and do that. I'm going to go back a screen. These are the actual system tests themselves that we choose, and you can see a 10, a 15, and a 30, but when we actually choose the data we're going to test, we have to choose the 5-minute time frame for this to work appropriately. Now you see here that we have chosen the 5-minute time frame, and we've chosen 20,000 periods, which is just a little over 3 months in the 60-minute time frame, and of course shorter than that in the other time frames. We want to choose both long and short because when we trade Forex, we can trade either way just as easily. And we always do a points-only test, which is the way your system comes defaulted. If you don't change that, that's going to stay a points-only test. We then run these tests, and it comes back with a screen that looks similar to this. Now I've sorted this in descending order. Your screen will not sort. When it initially comes back, you will have to sort it by basically clicking on this average net profit category or column a couple times, and it will sort in this manner. You can see here that the 60-minute time frame was the best performing time frame across all the currencies that we tested. It was up over 853 pips on the average. And then you can see the various other time frames. This happens to be the 5-minute time frame. The 5-minute time frame did not perform that well in the Method 2 strategy, but again, that is the preferred time frame for Method 1 traders. Now I can drill into the 60-minute time frame since that was the most successful time frame. And I can see that, it was an average of an 853 pip gain amongst all these currencies, but the British pound was actually up nearly 1,700 pips. Now this will take points here, PCS, but it's indicating pips. The Swissy was up 1466 pips, and so on and so forth. Canadian dollar just up 124 pips. Now, if you're up 1,500 pips over a 3-month period, that's $5,000 per month. Now we can drill into the Swiss franc. We can see here that the Swiss franc was up nearly 1,500 pips. You can see that we placed 84 trades in that 97-day period. 38 of them were winning trades and 46 were losing trades. But you see here, even though there were more losers than winners, the average winner was 62 pips, while the average loser was only 19 pips. Biggest winner was 218 pips. Biggest loser was 73 pips. That is why the overall system has done well. You can also click on this equity tab right here to see an equity line. And you can see this is a very nice, steady, upward trending equity line, which is what we want to see. Remember when we talked So you can see here that this is a very steady upward trending equity line. This is what we want in an equity line. If we see something that looks more like a roller coaster, most of the time our hearts can't take it. We can't handle trading in this fashion. And so we do want a nice steady upward trending equity line. Lindy in San Diego says, and this is a letter she sent to her user group inviting them to a meeting to see the Forex Traders Advantage software. And she says, for those of you who have attended our last 2 group meetings, you have heard from me about a software program I've been lucky enough to be beta testing. The software itself is from Metastock, and I have been using a plugin called the Trader's Advantage. It gives simple-to-see signals to enter or exit a trade. For those of you who know me personally, you will know that when I say I have never seen anything like this in my life, I mean it. There's a huge pip potential here. Please come and listen to the presentation and see what I am so excited about. So that's Lindy in San Diego. Thank you very much, and good luck trading.